Hey everyone, welcome back to another episode of the Recession Resistant Real Estate Radio. I'm your host, Brandon Cobb, and today I have with me Pete Reese. Pete is the president of RealVest Properties, a land development investment company. He has nearly 2 decades of real estate experience as a broker and investor. He successfully purchased and sold several hundred properties of real estate for a profit, and he's on track to do roughly $4 million in revenue in 2022. I can't wait to jump into that. He's got a land flipping and development business. He's always looking for the next deal, and this is really cool, including his longtime dream to own a private island. I'm right there with you, my friend. Besides his professional accomplishments, Pete's a proud father to 3 beautiful girls. I bet you got your handful with those. Yeah. Keeps up with his family by working out and enjoying a vegan diet. And he is the 31st great-grandson of King Henry II. That's an interesting fact right there. Pete, welcome to the show.
Well, it's great to be here. Thanks for the introduction, Brendan.
We're excited to have you. Now, for those that don't know you, you talk a lot about land flipping. Tell us what you're up to these days and give us the origin story on how you got started and pivoted into this very niche opportunity.
Yeah. It's something that believe me, before I got into land flipping, I knew nothing about it. I kind of went down a little bit of a rabbit hole when I saw some stuff online of other people doing it. And one thing led to another, and it's been my full-time focus and income generator for the past 2 years. So, and I don't see any end to that in the near future. So, the model is basically we're buying properties directly from landowners or property owners, and then we're doing some minor development things sometimes, maybe getting a perk test, maybe doing some clearing, maybe doing some surveying. Sometimes we'll subdivide the properties, and then we'll put them on the market and resell them. So, and we buy them at a price which allows us to actually put them on the market and resell them for a good price, so they sell quickly. So our average time in our inventory is only about 60 days generally.
Mm-hmm. Oh, wow. So you're not doing any crazy entitlements or rezones or taking it through a very extenuous process that we've done quite a few times. So I know exactly. That's great that you're not having to do that. Walk us through that.
Yeah, I've got a couple of those properties that are kind of ideal for that type of thing, which I consider kind of my long-term holds and hopefully more of the home run type properties. Mostly I just work on the singles and the doubles, every once in a while I'll hit a triple. But the main thing is keeping the money moving. And the faster I can keep the money moving, the better my return on investment is.
Yeah. So focusing on singles and doubles. I like that. Now tell us a little bit about your origin story. How did you get started and how did you pivot into real estate? And then ultimately, how did you get to land flipping?
Yeah, well, I've always been interested in real estate. In fact, I was interested in it from a young age because my parents never owned a home. We actually lived in an apartment. So I was always looking at my friends and I'm like, why can't we own a home too? And I know it may seem basic to a lot of people, but it was something from a young age that kind of, I don't know, just got ingrained in me. And I knew when I got older that real estate was going to be a big focus for me. And initially my first goal was to actually buy a home of our own. We did that. We actually sold it within 2 years, and I ended up with something like $50,000 in the bank. And at the time I thought, wow, this is great. And we bought it with an FHA loan at 3.5% down, and then sold it 2 years later and, made $50,000. And then we just kind of put that into the next property and kept leveling up. That kind of led us to doing home flipping. When I say us, that's with my wife, Heather. So we've been a team for, 20 years now. And so that led us into home flipping. And at the time, it was actually pretty popular at the time. A lot of people think this home flipping phenomenon is pretty new, but at the time there were HD TV shows at the time. And we looked at those and we thought, hey, we could do that too. So we kind of got the bug on that, and we're doing that for quite some time until the market really crashed here in Southern California. And that kind of put the brakes on the whole home flipping thing. It really wasn't the best area to be in. But before that time, I had actually gotten my real estate broker license out here, which allowed me to kind of, when the market crashed, kind of pivot into helping clients that I worked with at the time were mostly banks. So I was really focused on listing REO properties. So for a good couple year period there, I was just solely focused on listing REO properties. And I still got to work with investors that were buying some of these properties. Um, a lot of single family home investor type people that were just accumulating them for rentals at the time. And then I focused on listing short sales for a while. That was kind of my niche for a while. And then after that, I kind of just focused on working with kind of larger investment companies and finding them deals. So I got really good at that, was able to bring them a lot of value and, keep the income coming in as well. But eventually I got to the point where I was like, I really got to get back into, the investing side of things. And I didn't really want to get into flipping houses again because that's so it's tough. It's a tough market. I like it. There's money to be made there. Um it just seemed kind of daunting for me at the time. Like, oh, I got to do, remodels and contractors and all this kind of stuff. So
Mm-hmm.
um I went down this rabbit hole. I read some stuff online about land flipping, and started to learn everything I could on that. And then one thing led to another. And now I've been in the land flipping business for about 2 years now, and just pedal to the metal and trying to grow it as big as I can. So
I love what you said there. You did what at heart I think is true entrepreneurship, which is learning to pivot and recognize needs of the market. Nothing could have been worse for the housing industry than back in 2008, 2009 when everything dried up. But you saw an opportunity to serve a new need that was created, which is working with these banks. They are now repossessing all these properties and they got to sell them. So you were able to just pivot, and the money is moving towards these REOs, or at least selling these REOs and getting a piece of that. I find that was really brilliant. And as things change today and interest rates go up, we're noticing a lot of things that are very similar. It's all about recognizing those opportunities. What was it about land specifically that made you recognize it and become motivated to jump in this particular niche?
hmm well, very good question. I I read some stuff online. I read some kind of anecdotes from people saying, "Hey, I bought this property for 10,000. I sold it for 30,000." And those type of things. I was like, "Well, that's pretty cool. You can buy a property for 10,000, sell it for 30,000 in like a couple of weeks." I thought, "Well, that's pretty low risk, and that sounds like a pretty good return." So I was telling my wife about it, and she's like, "Yeah, I think you'd be good at that." And then I thought, well, why not? Why don't I just give it a shot and see what I can do with it? And then I just started learning everything I can about a training program. There's a couple of different companies that do some training on that. So I bought a training program, and I just went in as deep as I could, learned everything I could for 2-3 months. And I initially, and then immediately started, you know, putting the business model to work, and started working right away.
Now, talk us through the model. So there's a lot of different models when it comes to land, right? You could do what we
Yeah.
do, which is we go direct off market to seller, and we try to rezone the land for higher density. And that's how we like force appreciate the value of the land. And then our construction company can go in and kind of handle it. That's one thing. There's a lot to that. Then I know there's the land geek and land shark stuff where you're able to buy these properties that for like pennies on the dollar, that are kind of I think they're like out in like Arizona is a popular spot
Yeah.
or something like
Desert
that. I can't
squares,
remember.
they call them.
Desert squares. Yeah, I was trying to
Yeah.
think of how to describe these pieces of property, and
Yeah.
you're basically doing like seller financing to these
Yeah.
people that want something like that. What model are you running, and walk us through the whole cycle of a deal and who all is
Sure.
involved in that?
Yeah, yeah, good stuff. Well, the model essentially is, it starts with direct mail. So all of our business is generated by direct mail. And what we do is we send out a 2-page letter. First page is kind of an intro about who we are and what we can do for them. Second page is actually a purchase agreement with an actual offer price, details about their property. And we send them out, and we send out a lot of them. At this point, I'm sending out 50 to 100,000 of these letters per month. and that gets the phone ringing, it gets the emails coming in, and it gets people mailing us back, actually. And and then when these responses come back, then it's our job to kind of evaluate, dig in deeper, because when we're sending off these letters and offers and everything, we're building a list. Say we're looking for properties within this certain geographical area or county that are, say, 10 acres and above, and may be within this assessed value range. And then we filter out other different things to come up with a list, send that out, and then the offer price is based off of average acreage, price per acreage in that area. And then when it comes back, we evaluate the property as like, oh, we were a little high on that one, we were a little low on that one, so we can maybe negotiate with the property owner if they thought we were too low. Or it could be a property that we just don't want to buy. It could be a swampland. It could be landlocked. It could have other issues that, it may not be buildable or even good for recreation. So, we're evaluating those as they come in, deciding whether to buy them or not, getting the purchase agreement locked up with the property owner, and then we're sending that to the title company to close the transaction. In the meantime, we're doing our due diligence on the property. I've got a team that kind of, as soon as we get a property under contract, the clock starts ticking, and a whole different chain of events is set off. We hire a photographer and a drone operator normally to go out to the properties and do their inspection. We have people that call the county or the city or whoever the jurisdiction is to find out about the zoning, the utilities, everything you can find out about the property. We also have a lot of tools at our disposal. One of the main ones we use is MapRight, which is a tool that allows us to take a look at the property, from my desk here in California, and I can look at properties anywhere in the United States and pull up tons and tons of details about it. Topography, whether it's got wetlands, FEMA flood zone, lots of different overlays and satellite image base maps. So it's really a good tool for what we do. So we can figure out a lot from behind the computer, but it also, we need to dig in deeper before we actually close on the deal. And then we close on the deal, and we generally have a strategy with that property, whether we're going to do some clearing, whether we're going to do a perk test on it, or something along those lines. Generally something pretty basic, or maybe a combination of those things. And we list it with a local broker to resell it for us.
And who would you say is your target buyer for these types of things? Is this land that's being cleared off and sold to builders are going to build on it, or a homeowner that's going to build on it, or somebody that just wants some land to go hunting on? I mean, how would you describe the demographic, or is it all the above?
Yeah, it kind of is all of the above sometimes. But I'd say a lot of them end up getting sold to maybe an end buyer that's looking for maybe a home site, maybe a recreational property, or maybe the combination that, like, they're buying it as a recreational property with maybe the thought of someday turning it into a home site. But generally we're doing at this point, we're doing larger acreage properties, depending on the area, 10 acres minimum, or maybe 25 acres minimum. And, so a lot of them can be used for recreational properties. But also we try to make sure that we try to see if they're also buildable, and then obviously if they are, that increases the value of the property, and we can market it as such. But we're real reliant. I wouldn't say reliant, but we lean on our local broker partners a lot, because from one neighborhood to the next, things can drastically change. So we kind of integrate them into our purchase process as well. And that's kind of part of our due diligence. We ask our broker partners, hey, what do you think of this property? What do you think you could resell it for? What would you do to the property in order to get it on the market and get it resold? And then we use them to relist the property for us. So
you lean heavily on your broker partners because they've got the local market knowledge. So when it comes to these local markets, I know that when you've got a very niche investing strategy like this, a lot of these, build to rent funds, they're only doing build to rent in markets where it's
Right.
attractive and rent rates are climbing and there's growth opportunities. Are there certain demographics that you look for when choosing where to do your marketing? 50 to 100,000 mailers is quite a bit. Is that
Yes.
in a select few markets? And if so, what are the motivating driving factors that say, hey, I want to focus here?
Yeah. Well, the main factor that we look at really is the market itself. Like, is there an active market in this area for land? Meaning a lot of like sales and listings. There doesn't have to be a lot of listings in the market, and those are actually better areas, but where there's a lot of sales. And if it's, the certain areas, just there seems to be this like imbalance between buyers and sellers. Like the property owners think their properties are worth this much, but all the buyers think, oh, the values are down here, and just not a lot of transactions happen. So when we pick an area to mail to, we look at that, we see how many transactions are happening. Is it an active market? And if it is, then I know that if we have a decent property, a pretty nice property, and we're able to price it right, I know it's going to sell. And I know it's going to sell relatively quickly.
So you're making sure that there's liquidity on the back end and you're not going to
Yeah,
that's
that's a great way to put it, with liquidity, because I have no interest really in sitting on a property for a year, on the market. I like the deals where we can put them on the market and it's a good price. We've got offers coming in right away.
Yeah,
And
turn and burn it pretty quick.
yeah. So our average hold time, and this is with an escrow period on the back end when we resell them, is 60 days. Sometimes we can get them on the market, under contract, and actually resold. I think our probably quickest is like 14 days, and that's going through a title company or attorney. And so that's nice when we can make that happen. So
now I know you're doing roughly $4 million in revenue and you're expected to do even more than that in 2023. Are you financing everything in house? Do you work with investors? Do you raise capital for deals? How does that work?
Right now, doing everything ourselves, like self-funded, I guess you could say.
Okay.
But always looking for bigger and better deals. So in the future, I'm probably open to working with partners in order to kind of take advantage of deals that I probably pass on sometimes just because they're bigger than what my standard deal might be, knowing that I've got to put all that cash out. There's no there's no bank loans on any of these properties. So the returns on investment are great, but still, it's a big check to write sometimes. Even if you have a $400,000 property and you're pretty certain you could sell it for $800,000 or $900,000. I mean, that's a great return on investment, but it's also $400,000 that you have to, send a wire or write a check for. So
yeah, you can tie it up. What I love about this strategy is when you invest, let's say you're comparing it to picking individual stocks, right? And I'd say the stock market is the more cultural, popular way of most people investing. Most people are not investing of all these other ways in real estate besides flipping properties and rentals that you see on TV that are a great way to earn income passively, but it's really risky. I use all the examples of the companies that were doing great at one point in time, like Blockbuster. Then overnight, you have a new tech company, Netflix, coming, boom, they're wiped out. You could have done well for 15 years in Blockbuster, and literally almost overnight, your entire investment's completely wiped out. With land, it's not like that. They're not making any more of it. You literally have a capped supply on something that is always going to have some kind of value. Now, the emotion of the market, depending on what type of land it is or what type of real estate asset it is, might influence the price a little bit, but you can work through those troughs and it'll always be there. So at least you're going to have your capital tied up in something that is not going to go to zero potentially one day, unless someone dumps a bunch of toxic waste or maybe a bomb hits it or something like that. Are there any other advantages that you can fill in the gaps there that maybe I missed that you like about this strategy? Because it is so unique.
Yeah, I mean, I think really the returns are something that's very unique with this asset class and this model. I mean, our goal with most of these properties is that we're trying to double our money on each transaction.
Oh, wow.
So, and if you're looking at, a 60-day hold time, on average, then it accelerates very quickly. So, I was looking kind of deeper at our numbers yesterday, and it's not only the fact that, we're hoping to do, we're on track to do 4 million in revenue this year, at about a 50% gross profit margin, but our portfolio value of the properties that we own that are, either on the market or under contract to be resold, that is growing at a compounding rate.
Mm-hmm.
So it's very interesting to kind of, I don't know many business models within real estate where you're getting the kind of the returns that we're getting on these properties. And like you said, it's land, so it's not some speculative crypto asset or something where
Yeah.
it's kind of nothing behind it. It's land. You could go out there and you could camp on it, throw an RV on there, whatever you want to do. Um, but I just think it's very unique. And there's a lot of, like you were saying, there's a lot of like niches within land flipping. And some people really excel at doing that model where they're buying the really inexpensive properties and then financing them. And I'm sure their returns on investment are great,
Mm-hmm.
especially, they probably seller finance them at a good rate, and they're picking up these properties for almost nothing.
Mm-hmm.
But it would be tough to make some real money that way, in my opinion, unless you're doing some super high volume. There's other people that do more of the development side of things. They're really focused on creating, single family subdivisions.
Mm-hmm.
Um, we do some, minor subdivision stuff sometimes, and we've done some sketch plans for major subdivisions and let people take it, further if they wanted to.
Mm-hmm.
But yeah, so there's all different niches within. I just think it's kind of limitless what you can do. And I mean, I'm even looking to, I think there's going to be a big opportunity within the land space to work on kind of renewable, like basically turning your land into an income generating asset, specifically with solar farms, and developing that property so you could have a solar farm or cash out to maybe an investor that wants to hold that solar farm for a long term.
Speak more into what you're noticing around that, because I've seen a lot of incentives from the government pop up when it comes to this whole energy thing, especially with this current administration in office. They're very green. They're pushing everyone to go electric vehicle, lower emissions. I mean, there's a huge tax incentive. I was talking with a guy just 2 months ago at a mastermind meetup, and he was talking about this fund that was created where there's 200% depreciation for these pieces of machinery that go in and help the oil drilling process become more efficient. Like there's less waste involved and it cleans things up. I'm butchering it, and don't ask me the name of it, but I was like 200%. And he goes, yeah. And he pulled it up and he showed me. And it's like the government is giving, for every you invest $100, you get $200 of depreciation. I'm like,
Yeah.
wow, that's really interesting. What are you noticing in this green space with land? And what are some of the big, like, where do you think it's headed?
Well, I believe there's a tremendous opportunity. I've kind of went down this rabbit hole the last couple of weeks trying to learn everything I can about it. Basically, the whole energy grid in the US, they're trying to convert it to clean energy by 2035. And there's a ton of incentives that the government is giving, basically the federal government and local municipalities as well. For solar specifically, there's a 30% tax credit on a direct tax credit and other incentives in the new Inflation Reduction Act. And then a lot of these local municipalities have additional incentives on top of that as well. So if you're an investor looking for some major tax benefits, they're really trying to push you into the solar space.
Mm-hmm.
And kind of what you're doing when you're creating a solar farm is you are basically creating your own mini power plant. And sometimes they're not so mini, but you're creating a power plant that's going to be connected to the grid. And then you've got the power company paying you for, 30 years. And I mean, that sounds like a great income property to me when all you have to do is go out and have someone, clean the panels every couple of weeks or whatever. mow the grass. So
Yep. And I know with all the interest that's moving in this renewable space, the price of solar panels have come down just, oh
oh
my
yeah.
gosh, dramatically over the last 10, 15 years. It's getting to the point where it's now kind of noticeable and interesting. Cause I remember when this, the whole renewable thing was really gaining traction. I was looking into it and it was just really hard to make the numbers work.
Yeah, the numbers
And
didn't work. Now
yep,
they do though, you know.
yep.
And especially if you can take a property, where we're buying a property for a really aggressive price, and we're maybe able to pay an amount for it where it's not such a big deal to hold it for a while, and then work with a firm, an engineering firm, to get it approved for a solar farm.
Mm-hmm.
And and then 3 to 5 years we've got something that's worth heck of a lot more than what we started with, and we're forcing the value and the appreciation that way as well.
Yeah,
So
I love scenarios, any scenario where you can appreciate the value of the asset. That's a real key. And that's what we do with a lot of the rezoning with the land. I mean, that's the key. You've got to make your money on the front end. Now that you've been doing this, what would you advise somebody who may be new or somebody who might be investing alongside others that are doing this? What are some of the risks that might be involved, red flags, and how would you mitigate those?
on the land flipping side of things,
Yeah.
yeah,
With what you're specifically doing.
yeah, I think you can get in trouble if you jump into a property without knowing everything about it. At first, it's probably it's probably best to be a little overly cautious rather than overly aggressive, because believe me, I've spent a lot of time studying all these properties, and we spend a lot of money on our due diligence and making sure everything about the properties are right. But even I'm not 100% on them. There are properties where we've just made a couple $100 on them. We haven't lost money on any of these properties yet, but I could see how it could happen if you bought something and you didn't realize it had this particular issue or that issue. And so doing your research on these properties is really essential.
Yeah.
And kind of walk before you run, I guess. Do some of the lower dollar properties before you start stepping into the bigger ones. So then you'll learn some of the potential pitfalls that might might come your way.
Two of the things that you do that I love that really mitigate risk in my mind are, one, you look at the liquidity first, right? I'm rereading Sam Zell's book, Am I Being Too Subtle, for the second time, because I get new things now. I'm to the point where I'm like, I can't find any new books that really catch my attention. So I'm rereading all the whole books
Yeah,
that
I
I've
like
read
reading
that
the
got
book
my
like
attention.
5 times, a good book like 5 times, rather than reading 5 different books one time.
Yeah.
That's the way I am. So.
Yeah. And he talks about how liquidity is value. Liquidity is value. And so that's what you're looking for, is making sure you are able to get out of it in discipline on the end, buy it at a deep enough discount where the equity that you bought it at, you've got so much of it that it basically just reduces your risks. And then the second thing is you take advantage of the who, not how principle. Love that book by Dan Sullivan, where you find and partner with a local expert. Right. If you aren't the local expert in that market, you find a broker who knows that market really well and can probably tell you before you even buy it, like, hey, look, here's some comps. Here's what we're going to do. I actually sold some of these, which helps reduce the risk a ton. I love that idea. So I've really enjoyed having you. This has been a great conversation. If people want to get in touch with you or learn more about you or learn more about what you're doing, or maybe even some opportunities that you might have, how do they find you?
Well, they can find me at turningprofit.com. And that's our website associated with our new podcast, which is getting launched. I've got monthly income reports where we kind of detail everything we're doing within the land flipping business. How much revenue that month, how many properties we sold, how many properties we bought, gross profit, lots of different insights. We go deal by deal, kind of break down, how this particular deal worked, what kind of return we got on it, what went right, what maybe went wrong, and just kind of following our journey. So if you're interested in that space at all, I've got no training program or anything like that, but I think it's valuable, and maybe something you could take and kind of take pieces of that and do your own thing with it. So yeah, turningprofit.com.
Go check it out. Turningprofit.com. Reach out to Reese. Reese, it's been an absolute pleasure having you on today.
Yeah. Same here. I really appreciate it, Brandon.
All right. Till next time.